time to welcome our market master, Dipen Seth, Head Institutional Research at HDFC Securities. Dipen, good morning. Thank you very much for joining us. Well, first up, lay out the agenda for the next 6 months. Would you be cautious, or would you think it's worth taking a bet that the economy and the polity will be on a revival mode?
The simple answer to that, Lata, is, do I have a choice?
Okay.
Can I aspire that the present state of affairs should continue, in which case I would sound as being deeply unpatriotic. If I want good things to happen to this country, I want a drastic change. Whether the change will be for the better or worse.
I don't think investors want a patriotic answer. They want a practical answer to know what to do with their money.
And I think everyone wants that drastic change, trust me.
So, yeah, but the thing is that what is the change that we want? And is it just X instead of Y? Is it a better quality of discourse with regard to governance, with regard to business policy, with regard to how to run this country? And I think the noises that are emanating have finally begun to get much more constructive rather than vicious.
Okay.
I suspect that as we approach elections, there will be, people will take sides and lash out at each other. But there is universal recognition of the fact that things have to change, and change drastically, and in ways that they haven't changed before. So all this sounds very abstract, but the thing is that for business to work effectively in this country, and for economic growth to come back, and for the investment cycle to revive, and all these other things which will drive the stock markets. So I'm not flying a kite here. I'm talking about hardcore nuts and bolts. I would want that whoever the next government is, and it could well be this one, it could be another one, and so on, will have to reset the agenda, and the discourse for that agenda has begun now in true earnest. A lot of detailed, drill-down questions are being asked about how will we run the economy with respect to, let's say, monetary policy, with respect to licensing, with respect to the power sector, with respect to labor laws, with respect to land laws, and so on. I must admit, at the risk of sounding like an agent for the Aam Aadmi Party, that the entry of this party has improved the quality of the discourse. So I'm not their fan, nor am I their enemy, and I don't think this is a medium to take sides. I think it's important that the contribution of this party has been spectacular insofar as improving the discourse is concerned. And I think that's a very, very constructive thing to have happened.
Okay. No, that's positive, certainly, that at least the poison is out and getting discussed. But, I mean, what is it for those who are wanting to manage their money? How should they approach markets? Do you, bet that earnings cycle at least will see more upgrades in the months to come?
Inevitably. The earnings cycle will see an upgrade driven by stronger and more confident prospects for revival in the economic growth trajectory of the country, which will in turn be driven by the revival of the investment cycle. And whichever new government, again, to come back to the change that is on the cards now, so whatever new government comes to power, I dare say that even if a third or a fourth or an nth front government were to come to power, there is universal recognition that the investment cycle needs to be revived. Will it happen in 6 months or a year? No, it will take 2 or 3 years for the healing to play out. The stock markets will, fortunately or unfortunately, react immediately, and that's where the opportunity is going to be. Right now we can keep arguing about what can go wrong all the time, but...
So you mean if there is a little bit of uncertainty after the elections, that would be a time to buy?
Well, I'm saying there is uncertainty even now, and this is the time to buy. Okay. This is the time to stack up your bets. A few days ago on your program I said that if you can't figure out what to do, which is actually where I'm coming from right now, you do a little bit of diversification and hedge on both sides. So there are some stories which do well despite what India is. So whether it's an IT or a pharma or consumer space and so on. FMCG looks a tad overvalued right now, but it doesn't matter.
So yeah, actually on that point, I think there is a money control question exactly on this, Sonia. So let's just go with that. Harshad from Mumbai is asking whether exactly the theme you are saying of buying defensives, ITs, and cautious on rate sensitive and cyclicals is going to continue for you until election.
So if you're running a portfolio, you could tilt it a little more towards defensives if that's what you think is going to be, and there's going to be a lot of turmoil in the market, so let's play it safe. I will respect you for having that attitude. You may not lose too much money if that happens. but you may perhaps not score outsized gains. Unfortunately, we in the market are all investment junkies, not just sensible investors. So the sensible investors might well, so the safety-oriented funds and the capital preservation-oriented funds,
Risk-averse guys.
the risk-averse guys would tilt a little bit to that side. The betas, again, if like I said, if the quality of discourse on how business should be run and the country should be run is going to improve, then I think even within the betas, the high-quality governance stories would stand out should a capex cycle play out.
Okay, Dipen, hi, good morning first of all. You know, one theme I wanted to discuss with you, which I had asked the previous guest as well, is that if the market gets what it wants and if a stable government comes to power and if the reform momentum picks up, then what do you do with these PSU companies which have been lagging behind for so long, you know, the Coal Indias, the BHELs, ONGCs of the world? Do you think you should take a risk now and buy some of them in anticipation of a pickup?
Your question started by saying if the market gets what it wants. Unfortunately, the people of this country are not going to vote in order to give the market what it wants.
Yeah, of course.
Right? The market wants all problems to be solved miraculously overnight, and all hindrances in the way of business and economic growth to go away overnight. That's not going to happen. You said if the market gets what it wants and a stable government comes to power. So I suspect a stable government may not come to power. The evidence on the table tells me right now that we will have what is known in unpleasant language as a hung parliament of sorts. There could be a little bit of swing this way or that way, but there's no coalition to my mind that looks like it's capable of getting 272 or more. If you belong to one or other affiliation, you will deny this claim, but I think by and large that's the evidence which is available to a rational person right now. Even so, I would say there is such universal recognition that things need to be put right, that like I said, whoever will come to power will try to put things right from a macro-eco perspective. Whether they have that capability or not, the jury's out on that.
Okay.
But what happens to the PSUs? Now that's the specific answer to your question is, it's fashionable to say that the government shouldn't be in business and the government has no business being in business and all that. We've heard these noises recently also. Well, unfortunately, Sonia, the government is in business. And there's no way the government can get out of business in a foreseeable time frame in this country. You can't overnight get out of an ONGC or a Coal India and say, let's hand over these assets to private sector players. God knows we don't know how to give them over to the private sector, whether it's auction or whether it's oil fields.
Would you buy any
Spectrum.
of them?
So there is a lot of value creation opportunity in PSUs. They should, at the risk of sounding like an old-fashioned Fabian socialist,
Which ones? Obviously not.
I will say that there's a hell of a lot of value creation opportunity available, and these levers are the same levers which can move the country as well and move the economy as well. So a company like Coal India, which is struggling to even hit 480, 490 million tons output, God knows we need at least 600 million tons from Coal India.
Yes.
And it's selling coal at 40% the price of landed imported coal of the same calorific value. So imagine the kind of benefit that India would get should Coal India increase output by 20%. I'm told there's 250 million tons of additional output which can be got just by laying about 300, 400 kilometers of rail lines.
So take your